Hey everybody, hope you're doing great. Hope you had a great week of trading. Today we're going to cover the QQQ NASDAQ-100 for the week of May 24th, 2021. For sake of brevity, we're just going to call this the Qs. Everything we talk about here comes straight out of our big data AI platform called Prep to Grow. Essentially, Prep to Grow and the team's belief is that robo and financial advisors are a total joke. You actually don't really gain anything from them. At best, based on what we've come up with, is you gain maybe 1 to 2% per year on average based on the stats, and Prepro just doesn't think that's acceptable. So our platform sits on top of any broker. We analyze what's in your investment portfolio. We let you know what the risks, what the potential gains are, and then recommend adjustments to your investment portfolio, whether it be traditional equities such as stocks or options, or what will be alternative investments such as crypto, real estate, etc. Also, Prep to Grow is going through a seed round. So if you'd like to get involved, become a very early stage investor, part owner of Prep to Grow, we're certainly going through and doing a seed round now. This is the details. We'll have the link to our crowdfunding part of our seed round. In the link, we do have incentives if you're interested. But again, Prep to Grow is growing. If you want to see more details on it, we'll provide the links. So let's jump into the week. So what happened last week? It's pretty much in alignment with what we expected. It was a flat week. Anything between 0.5 and negative 0.5 is a flat week. It just bounces throughout the week. It's about up 5% year to date. This is the Qs and the NASDAQ-100. From our perspective, year to date growth is actually looking good. 34%. It's down 1% from last week. Typically, what you see is Q2. There's a little bit of a downswing in terms of growth. They got over their massive Q1 hiring for their goals and their growth estimates and that kind of stuff. And Q2 is kind of just the acclamation of all that work that they've done in Q1, and we've seen a little bit of slowdown of that and the flatness of it. No pullback, just the flatness to it. For nothing to really be concerned about, but you kind of see that in the graph on the right. Analyst forecasts, I mean, they're flat, 29% growth year to date. So they're expecting it to have no change so far based upon the earnings announcements that came on Q1. They're strong announcements. Important thing is what we'll talk about in the future is that where the current stock prices for the QQQ, the ETF, and generally the NASDAQ as a whole is down about 13% from our estimates. This for us really fits the sweet spot of growth, right? And as you can tell, this is the second time there's been a bit of a cyclical downturn. Last time was in March for this year, and now in May. And as we're projecting for the next couple of weeks is the start of a bull. So reasoning, opening economy. This pullback was actually really good. If you've looked at our previous videos, we're very concerned about the market being in a bubble. What we have is a calculation or an algorithm really that calculates stock to growth. And it's to parity. Last week and the weeks before that, it was really high, very concerning that there was going to be this kind of pullback, and there was. And so while investors are still jittery, so there still may be a bit of a pullback in sectors, but we think the pullback has really kind of stabilized things. Another thing, growth is flattening as a concern. We just talked about that, just kind of the Q2 norm. Over the last couple of weeks, as we get out of the earnings announcements, there's been some mixed quarterly results, like Netflix as an example, didn't do so well. Other ones doing real well. Cisco last week, they looked the strongest they've been. That was our forecast, that they were going to be very strong. They came out very strong. Their orders are very good. They had to adjust some earnings for the year because of the beginning of the year, the mid-year pullback. Cisco's is on a different fiscal year calendar. Their fiscal year ends in August. So, their Q4 last year was right smack dab in the middle of the pandemic, and then coming out of it, Q1 is started to still have those impacts. So they're just really accounting for that pullback. But they look great. Volatility, there's a lot of volatility. Markets are very sensitive right now about pullbacks and what's happening in the general economy. So, there's still some area concern. Nothing red, though, which is great. It's the first week we haven't had anything red for a while. If we look at our forecasted signals, or what our algorithms are predicting. A good swing back into bull, which is in green. Volume to open interest rate is almost 2x what is on for the bear signals, more signals for bull versus bear. So we're expecting that the bull should start hopefully this week, but the latest next week. And we'll cover a little bit more around that. And so as we look at these signals, and these are the signals that are on the previous page, we start to look at the shifts. So Prepro really predicts things 30 days out. We just got through the May shift of the pullback. As you can tell, it should start to rapidly pick up. So April 25th last month, so about 30 days ago, as when we predicted, that was predicted that there'd start to be an increase 30 days from now. So this is 30 days forward. So if we predicted on April, that was come out and predict on April 25th, it really means May 25th is when these things will feel the impact. So we're going through into the next couple of weeks of a bull. And the bears are starting to go down quite dramatically during that period of time. So hopefully good things coming up this week. Start of the bull would be fantastic. Get us out of that the pullback. So let's take a look at who's announcing this week. So some biggies. Nvidia for sure, very biggie. Workday, pretty big. Intuit, pretty big. Autodesk, they're okay. It's about 4.6% of the total Qs. Nvidia obviously being the biggie. Last week, nobody really major announced. We covered Cisco heavily. It's on our site, preptogrowcom/QQQ, where we do a write-up on one or two of these per week. We did it for Cisco last week. This week, we'll do it for Workday and Nvidia. So let's jump into the pricing details around these guys, and let's take a look at them. So what you're seeing here, this is the Prep to Grow Active Trader subscription. So they get all of our recommendations, just not the ones where we analyze portfolios. So if you click on filter, if you're a subscriber, you want to see it, best thing to do is just go into the filter, slide it out, or what we call screens, go down to the ETF you want to look at, or the companies that make up that ETF. You want to look at QQQ, look at ARC, SPY, whatever else. Hit the earnings date, is it within 3 weeks, hit apply. And then you'll see the results of it. Here's a couple of them that are doing it. And if you're a subscriber, if you just want to save this so you can come in and get alert to it every morning, just click here, save as a screen, and then at 4:30 a.m. Pacific Standard Time, you'll get what's coming up for that week. So if we look at the four that were talked about, so Workday, Autodesk, Nvidia, and Intuit, let's just go through one by one. First one is Workday. So we made this recommendation for Monday, this coming Monday, so the 24th. Workday, their open and interest rate on this one is just insane, 6.68. We'll get into the actual numbers in a second. But Workday is announcing their Q1. Again, they're on a slightly different variation of their fiscal year. So anybody announcing this week is outside the normal calendar year. They have their own fiscal year for whatever reason. Workday, of course, based in Silicon Valley, the Bay Area, a little bit outside, but still in the realm. They dominate the HCM space for sure. Anybody that's anything in business uses HCM. They just crush everything out there. Smart people, good people, really good solution for the HCM space, which unfortunately it's not great software out there. Not a Salesforce or not a Facebook, but they get the job done. Their biggest concern to their growth is moving out of the HCM space. They have some finance, but they need to move out of that. I've been stuck there for a while, and that certainly is going to ding their growth at some point. They had some pullback. Actually, we've been tracking them since 2013. They had pullback, of course, mid-year last year, but we haven't seen this much growth for a quarter since 2017 in our tracking. Their stock price is down about 19% from our targeted stock price, so there's a lot of room to grow. And they've got in the stock, and they got good growth. So they fit our sweet spot of buying. If we look at our price projections, so they're currently, what are they at? 231. We're projecting them to get to 49. The analysts have a higher price target. They announce on May 25th. Really the only part of the Qs, not part of SPY or ARC or anything like that. Our projections for them is 87% for 5-day, 83% for 30 days. This would be a good stock buy. This is a call just because there's so much unusual option activity. If you're to buy this, we make the return within 12 days on average, or up to 4 days. So worst case is a return on this will hit on June 5th, worst case June 17th. So let's jump into this one. So the option expiration is May 18th, so very short time frame. It's super risky. We don't recommend anybody play earnings. It's super risky. Add an option on top of that, incredibly risky. If you look at Cisco as an example, had a fantastic quarter. They made an adjustment because of the pullback, and the market kind of lost it on them. They dropped 6% overnight, but actually ended the day up. So obviously it was those initial jitters that we talked about last week. This is the interesting part. So somebody bought 2,400 shares with an open rate of 368, so 6x what the normal volume is for this. Strike price is 260. It's cheap. Trade cost is about 220 for a contract. We may, if we played earnings, we would probably get into this. Technicals on this, 229 over the 200 days. So they've kind of not really moved much this year, which makes sense. But their growth is looking great. So Workday, we think they're going to crush it. But big challenge. They got to get out of the ATM space and do something more. Let's take the next one. Autodesk. This would be a good stock, but this had the most unusual option activity, just 0.5, which isn't great. Autodesk does a lot of like CAD software design for anything related to like buildings, entertainment sets, whatever. I know a few people there. They like it there. It's a good corporate culture. Surprisingly, they're in the Bay Area. This one's pretty good. It's mild risk. Doesn't fit their strategy, but they announced on 5/27. Analysts are expecting to get to 322. We're expecting them to get to 290, which is about a 3% price increase. So that's why I think I recommend it as a stock. Option-wise, not a huge gain here, 10%. So just be cautious. There's not a huge gain here. We're pretty good on the success rate, 89 and 90 over the 5 and 30 day. Good stock buy, but again, very limited growth. This one takes a little bit longer, 17, average 34 days for return. This one is for the option expiration, 7/16. And again, just not a lot of volume here, not like Workday, so, but still some interesting volume about somebody making a little bit unusual play here at the 290 strike price. We're recommending this on 5/21. And their technicals, 282, so they're up pretty high for the week, or for their out of their technicals. They've broken through stuff recently. For Autodesk, we've been tracking since 2013. Like I said, based in the Bay Area. They've been struggling for a while. They haven't really covered. They've had a nice spike in growth since the beginning of the year, but has flattened, and they haven't fully recovered from last year. So for us, with the limited gain, although they had a spike, we passed. So, and we don't play earnings, so if you do, take caution. Nvidia, love Nvidia, love. We own stock on them. We typically don't hold anything over earnings, but we may make an exception in this case. This is a recommendation from 5/17. This is the latest recommendations we had for them. Actually, it already sold. They're Nvidia's graphic chips. I've got one sitting in front of me for gaming. They do multimedia software as well. I've done some work with them in the past. I love Nvidia. I've known people that are part of it since the founding days. They love Nvidia. It's just a great company, great strategy, just really kicking it. We've been tracking in since 2016. They're announcing their Q1. Unsurprisingly, they're in the Bay Area. Generally, they should have a great quarter. They've been growing mercilessly. They're at an all-time high. Their stock price is down about 15% from our target. So again, these guys fit our sweet spot. Growth to stock is at a whack, so it's a good time, we feel, to buy. Big thing is they've had a flattening over the last couple weeks, which is really, I think, tied to all the acquisitions they've done. And sometimes you see that they kind of start to merge and start to slow down a tad. If they'd stop announcing acquisitions on the quarterly earnings, their stock continue to crush. So use caution on these. We do have a really good success rate on them. We do project that their stock price is going to get to 581. Analysts, and this is more short term than analysts probably are projecting. They're at 666, which is 36 is never a good sign. But anyways, they're announcing earnings on May 26th. This one was for December 27th expiration date, so very low. But we hit our gain. It was a nice gain. So what is that? About 20% gain, roughly 18% gain. Within a couple of days. We reckoned on the 17th, and it sold 4 days later. I think that was actually on a Friday, sold on a weekend. I could be wrong, though. Their technicals, I mean, they're low compared to where they need to be. They're certainly at the highest over their 200-day average, so I don't think there's some barriers, especially with their 52-week at 648. Nvidia, love them, own them. Feel they're going to do good. Again, earnings are always risky. They make an announcement of an acquisition, it's going to hurt their quarters, but long-term growth, they're crushing it. They're buy and hold for a while. Intuit, I hate these guys. We thought they were going to crash more in the pandemic, and our items picked up that they probably hurt, but they didn't. So we lost some money on this one, unfortunately. But Intuit, they're based in Alaska. Just teasing. They're another Bay Area company. They're announcing their Q3. We've been tracking since 2016. They're mostly in the small business space, taxes, financials, payroll, stuff like that. At Prepro, we use them. They're a real good solution. I like them. We have a good 35-day purchase for them, not so good 30 days. They're announcing on 5/19. Is that true? I think this was from our latest recommendation was from March 31st. So this is old, but they're announcing this week, I think, on the 25th. Our price projections at this time was, I'm not sure actually. Let me take a look. So that 433. So this is an older one. So let me just talk about them since we don't have recent recommendations for them, which happens. Look, the algorithms predict stuff. If they think that their performance is going to impact the stock market, it'll come up. We haven't seen anything that really impacted them for a while. But they're leader in the space. We thought they'd get harder hit with the pullback. They did not. Looks like their growth has fully recovered when the mid-year last year pullback happened. They tanked. I mean, their growth just took a dive. But they've recovered. Their growth is not at the highest it's been, but they should have a good quarter. These guys are definitely near the 52-week range, so just be cautious. We predicted they would get to 410 at the stock price, and they obviously blew through that. Again, Intuit, solid leader, probably a bit too costly. So let's jump back into just talk about the remainder of the week. Again, this is a little bit long one. We went into more details. Just apologize for that. So May 24th, these are the four announcing, 4.6%. Not enough to really impact the Qs if there's a lot of movement. Nvidia, if they do something wrong, have a bad quarter, that would set back the pool for sure. But our projections don't see that. So we very much appreciate your time. Thank you for listening. If you have any questions, always feel free to reach out to us at contact@Prep2Grow. If you like this content, please like or subscribe. Again, everything we talk about comes out of our Prep2Grow AI and Big Data platform. It's the recommendations come out for that. We're not financial advisors. We're not Charles Schwab with giving financial advice. This is that comes out of our data that comes from the market, and these are our projections for it. But have a great week of trading, and we'll talk to you next week. Happy trading. Take care.